It's time to go to the atomic level. It's time to go.
Welcome to the Atomic Level, the show where we decode the matters of wealth one insightful conversation at a time so that you can grow and protect your net worth and your net happiness. I'm Chris Snook, and today I am joined by Adam Campbell of Fund Launch Partners. Awesome. Yep. He is the managing partner, and I'm excited to learn about what they do because it's very unique in the market. So, Adam, welcome to the Atomic Level.
Yeah, thanks. It's great to be here and excited to talk with you and see if we can help uncover some hidden gems for a lot of your audience out there.
Yeah, well, so I love doing these, especially when I'm not familiar with the person, which is 50% of the time, and so it's always a delight to kind of get to know somebody in front of the camera and in front of the audience. You came through one of our campaigns outreach on LinkedIn, I believe, and took a leap and said, "Yeah, I want to talk with you." And so we're super excited to learn more about your firm and your work. But as you may know, before we dive into all that, we love to understand who we're listening to, where they came from, kind of what drives them, what motivates you, a little bit about your DNA, right? The atomic level of you, and then we'll get to kind of the unique things that you guys are doing in the market. And our audience of advisors and fiduciaries and ultra high net worth or high net worth individuals will kind of figure out where they can play with you and where it makes sense. So welcome to the show. Talk to us a little about your background.
Yeah, so I've got a pretty atypical background for people in the asset management space. So I grew up with a third generation family that were accountants on one side and a fourth generation engineers on the other side. So my career path really came down to like, who tells the funniest jokes at family parties? And I thought those engineer guys were just super dry. So I'm like, those accounting guys are funny. Like, I want to be an accountant someday when I grow up. So that's kind of where it led off. And I mean, my earliest memories doing accounting is sitting on, right next to my mom doing bank reconciliations at like 10 years old. And I mean, nobody's going to complain about child labor laws making your little kid do math projects, but that's what I did. So I grew up on math. I loved it. And it was part of the family business. So I started working with a lot of my uncles in CPA firms at a really young age, even before college. And it kicked off a career that I love now. I'm still thrilled to be part of it. Got a CPA, went to school for accounting, and just did a lot of turnaround companies in my early 20s. And it really did set the stage for me to be able to do this huge industry of back office. And I worked for a large private equity group in mid 2000s. And just had the chance to be early stage into that group and do their audits and their tax returns and be an Excel jockey and had the chance to really get involved in the back office that nobody's out there touting it's sexy or it's their career aspiration to crank through that stuff. But because I grew up on it, it was exciting. It was invigorating. It was puzzles that were really hard and most people shied away from them. And I thought maybe I can roll up my sleeves and make a difference on it. So I started out with a private equity group in about 2006, 2007, and ended up being one of the founding employees working with them and kind of ran with them as they set up 7 unique funds in 5 different funds and 7 profiles. So ran with them for about 10 years, and the firm went from 0 up to about 5 billion of assets under management while I was working with them. And I was the guy in charge of, audit coordination, tax coordination, basically cash flow management, working with their capital calls, distributions, investor statements. And we had a great team, and we just built this team and got bigger and bigger. Had a great publicly traded company CFO that stepped into the ring. And he was a fantastic mentor for me. So I wouldn't be here today without Chad Briggs is the gentleman's name. Look up to him and admire him highly. And he taught me such a great, basically gambit of experience. And it launched my career. And so ran with them for about a decade. The company, after I left, they kept going on. They IPOed years later, and they actually subsequently got bought out by Apollo about 4 months ago at close to 50 billion of assets under management. And I'm proud to say that a lot of the systems and processes and organization structure that I helped be instrumental to build, it was still in use today as part of what they're going on and moving on as Apollo company now. So over the years, I had the chance to not only do startup, not only do turnaround work, but also create institutional processes with great managers and great mentors that eventually went on to be multi-billion-dollar companies. And it just really instilled a passion for organization and system, not in the capital raising or the asset management, but really in this back office function that I dare say that most people take for granted that they don't realize how hard that's going to be to build on the back end of their systems. And that's really where I cut my teeth years ago and 20 years in the making to get into the asset management role that I'm in today.
So one of the questions that we all ask in the pre-interview, because none of the podcasts are ever scripted, is a little known fact that very few people may or may not know about the guest before they come in. And the answers always interest me. You wrote that you're next in line to be a chieftain in Scottish clan somewhere. So where do you live today? Where are you from? And why did you write that? What does that mean to you? What does that background mean to you? And what does that even mean? What does it mean to be a chieftain?
Yeah, and on kind of the personal note, I mean, I grew up here in Salt Lake City. Our firm, Fund Launch Partners, is founded here in Utah. And I literally grew up and married my high school sweetheart and had kids pretty early. So we've got 5 kids here in Utah. And we ended up moving right back to, 5 minutes from my wife's parents and 10 minutes from my parents. So I guess home is where your mother-in-law is, if you put it that way. But we loved it. So as we're growing and developing and having a whole lot of opportunity to be around family, I took a passion for my family name. And Campbell is actually a Scottish last name. And the Campbells were one of the biggest clans that were out in Scotland over. Have a Mick in front of our name, but Campbell is definitively one of the largest ones that are out there in Scotland. And as I got to know a lot of these family offices that we worked with, I did some family office management for quite a few years for several gentlemen. It just helped instill to me that there's a really big push once you've got tens of millions of dollars and maybe your health is failing, or maybe your business, you've sold it off, and you're just trying to figure out what you're doing with a later stage of your life. And I always heard it that what gets you to have a family office or high net worth, those aren't the same skills that help you enjoy the rest of your life in the aging years. And there's a lot of good books. One of my favorites is Aged, Healthy, Wealthy, Wise by Coventry Edwards Pitt. It's a phenomenal book on what happens when you're at that second stage of your life. And I got a front row seat and firsthand working through some phenomenal gentlemen and helping them figure out what they want to do with their legacy estate planning and just kind of the back half of their life. And over again, I saw that they wanted to do something for their family, for their community, for their namesake. And a lot of them were just like, well, I'll go put a name on a library and see if that works. Or I'll give a whole bunch of money to my kids and see if that works. Or I'll open up a scholarship and see if that works. And there weren't a whole lot of things that were grounded that absolutely worked every single time. It's there's some possibilities, but they were looking for ways to, in lack of better terms, become immortal in the eyes of all of the people that they blessed with those grants or the endowments or the different scholarships that they were doing. And it made me scratch my head a bunch and think, well, I mean, if I were to live forever like some of these guys were trying to do, it's probably not Adam that people are going to remember. It's probably Campbell, just like there is the Rockefellers and the Carnegies and the Stephen R. Coveys of the world. It's that namesake that really makes a difference. So I took some time to dive into my namesake and learn a lot more about that Scottish heritage and that Scottish background and what does it mean to be a Campbell and what is that legacy. And turns out there's a chief of Clan Campbell, there's castles, there's 800 years worth of history. There's just this really exciting engagement that any publicly traded company in the US would kill to have so many stories and assets and value add that they could work with. And I had it built into my last name. So I dove into the society, I dove into the culture, and looked at it and said, I mean, I'm born, bred American, and I love my American history, but there's some stories and some things that when you look at it from a youth perspective, man, who doesn't want to wear a kilt, swing a sword, go check out a castle, have some big, huge conclave feast with the dukes and the princes and the lords? That's cool stuff. I don't care how old you get. So part of what I'm doing in my personal life, apart from supporting Fund Launch Partners and building this initiative to, Fund Launch Partners really does democratize Wall Street. That's what we're looking to do. But at the end of the day, that's building a fantastic organization, an ecosphere. But why am I doing it? And in my mind, I want to give a benefit to the Campbells of the world. There's probably about 2 million Campbells, and there's probably about 14 million people on the planet that would be impacted in the Campbell ecosphere. I can't go out and save everybody in the world. I can't go out and, change Congress or anything like that. But if I can make a difference in the 2 million Campbells and the 14 million that surround that, in my mind, I'm like, that's way the heck better than putting my name on a library and hoping people read books. Like, I can actually build a community, build an environment, and help make it a better place. And why not do it with my own namesake and help those Campbells around the world do it? And I'll be darned if the Scottish background and Scottish heritage aren't the best way to be able to pull that together, because they've already got 800 years of doing this. So why not lean into what we've already got? And as part of it, I might have the chance in the next probably 6 to 9 years to be in charge of the North American region of the Clan Campbell Society of North America. And that's, in traditional history, that's usually the chieftain's title of a territory in the Scottish clan. So I look at it and go, maybe 6 years, maybe 9 years, maybe 12 years out. But I'm willing to put my name on the roster and say, I'll take up my charge, put the time in, and see if I can make a difference for the world out there.
Yeah, I think, first of all, your passion obviously comes across loud and clear. Just in general, you've talked, now about 2 different things, and what's been consistent is, the pace and the passion and the, you're exuding it. And I think that's a very human thing, in a time where we are wondering what humanity will look like over the next 5 to 10 years, 2 years, even with kind of the rapid development of AI and things like that. I think you hit on something that's a core tenet of the purpose of the show, which is to find the humanity in what we're doing, and to remind ourselves that that's not something that will be taken away unless we relinquish it. Meaning we may deploy it differently, and we will be doing different things. But the thing that makes us feel alive is our connection to our story and to the stories that predated us. And the thing that gives us purpose, especially, I'm interested in what you learned working with some of those clients and how that maps to the work you're doing today. You brought up a very key thing that is part of the audience that I know listens to this, which is kind of that transition of I accumulated or built wealth. Mm-hmm. And in some levels it's gargantuan, and in a lot of people's case it's humble, but it's meaningful, meaning they're mass affluent, or they've done well, and they have something to lose, and they also have something to pass down, or to pass forward, however they look at it. But the way that they got there and the meaning that was created through that, along with all the stress, along with all the different things, because none of it's easy, right? Mm-hmm. Shifts or changes, and a lot of times that leaves a void. And the skill set that got you to a certain place is not the skill set that takes you to the next place or helps you maintain that. And when we get to midlife, or we get to that point, there's all this kind of discomfort that comes from learning those new things, and looking for not just shortcuts, but for places and people where we can kind of take our life cycle and learning curve down, right? And maybe smooth it out a little bit. So I'm curious as to what you learned specifically watching others go through that, because you mentioned that and part of your explanation of the Scottish heritage thing. Yeah. And then how does that map to like the offerings, the product, and the positioning you guys at Fund Launch Partners have in the market? Do they correlate? Do they parallel? How do they tie together?
Yeah, absolutely. Well, part of my background is doing a lot of family office management that I mentioned. There's 3 gentlemen that I worked for that were kind of different scales, but all high net worth individuals, had mini family offices, if you will. And they were fantastic men of all sorts of different backgrounds and history. And something I noticed that was really, really hard is as you're building up that wealth accumulation, what you're doing is concentrating a lot of your resources to be wealth. And once you hit that top and you've got tens or hundreds of millions of dollars, for lack of better terms, one of your most strong resources that you have is the ability to solve problems with money. And it's not a bad thing by any means. It's just you've concentrated your efforts to be able to do that. So when I've worked with a lot of these family offices, and their whole initiative was to generate as much wealth accumulation as you can do. There's things that you can do with money. You can buy a lot of assets, you can invest, you can alleviate a lot of suffering depending on what it is. You can increase stability and decrease risk. But one of the things that's very, very hard to do with money, and I'd say it's inversely correlated, is more money makes it harder to build curated relationships or empathetic relationships, especially if it's disclosed that's your primary resource you've got. And if you think about it, most people take anybody that's got $70,000 a year that they're making, You've maybe got a family, a dual income home, 2 or 3 kids. A lot of the problems that they're really having on a day-to-day basis are probably financial related. It's not that they don't have any more or less time than anybody else. It's that, you've got college funds or high school kids and activities or a car that breaks down or, a furnace that goes out. And those are some of their biggest stresses that they look at and say, these are the problems that affix me every single day that I have to deal with. And I go to work and I grind so I can get rid of those. And along comes somebody with a family office at $100 million. And they probably haven't had to deal with that for quite a few times. I don't know how often they look at their bank statement or if they're even on a budget. So when you're trying to build a really close, empathetic relationship, the stuff that really vexes the people down at the lower income levels and that is the biggest benefit of your high net worth individuals, they don't match. They're totally off. And it's not a bad thing. That's just a reality. So when you're looking at it saying, how do I build a unique curated relationship between different socioeconomic levels? It's actually a lot harder for the guy who's got $100 million to sit down and hear somebody talk about their furnace going out. It's just the life. And then you associate yourself with different people, but you try to find people that match your needs, match your issues, because people with $100 million have unique sets of problems. But I'll tell you, the pain and suffering and stress that goes through that person's mind, I don't think we're built as human people to be that much different than the guy who's making 70K, who's dealing with those same problems or different problems with his kids in college and furnaces and car problems. They have different pain. They just solve it with different issues. And I'll be honest, if you don't have a lot of those resources, there's a different level of pain you experience, but they still have, at the same levels, it's not like the guy with a whole bunch of money doesn't feel pain and anguish. It's a different level.
Well,
but
they
can
may
still
have,
collaborate.
and it's all relative, right?
Yeah.
I think the thing that you're hitting on is that regardless of the resource, there's a different set of survival that happens based on what you have access to financially or not. But mentally, we all know people that have accumulated a massive amount of financial resources, but are emotionally retarded or socially, very not evolved. And so at some point, this journey of the human experience just reframes everything. And we all have our cross to bear, or whatever analogy you want to use, but none of us get out alive. Yeah. And all of us hurt when people that we care about get sick or unfairly, treated. And stress is part of the human experience. I think what I'm curious is when you say curated relationships, and it's difficult. I understand the mismatch of, somebody who's going, I don't know what it's like anymore, thankfully, to worry about a furnace or a car going out because I solved that decades ago or years ago or whatever. But what are they actually seeking in your experience? What is that $50 to $100 million family seeking that money can't buy?
Yeah, I think the easy thing is trying to figure out authentic relationships and actual deep connections of, in English, we only have one word for love, but there's a lot of other types of care and affection and love that you have for people, for causes, for communities. And especially if you have enough money that you can give back to a community, you want to love and cherish and work with those people and develop a relationship that you can express that and sometimes alleviate some of their financial problems, build resources to make life better. You really do want to give back and help them through those things and trying to figure out, how do I connect with not the problem, but the person? And so many family offices that I've worked with, they really do look at it and say, I do want to solve the problem, but I want to connect with them. I want to help them, be better stewards of their money, be able to help out with community projects, be involved in some kind of a church or religious item and be able to help them through those things. And they really do try to jump the problem gap to meet with the person and really establish that. That's what I call a curated relationship. There's some kind of a foundation that they build, and it might be centered around a church group or a community cause or a scholarship or whatever it is. But it's really looking at it saying, independently of, giving your kid a scholarship or somebody else's kid, do I feel like I actually know these people? Do I care about them? Do they reciprocate that regardless of all the other things that we're building? And I've seen more value for family offices coming in building those curated relationships than I have for them to just be like, hey, I'll sponsor a scholarship, or I'll put my name on a library, or, I'll donate to my church group. Like they do that because they can, and they're good people. But building those relationships, sometimes that's hard, but that's the most rewarding part of that giving opportunity that I see on the family office levels.
So you've mentioned family offices several times, which indicates that is your core customer base. I may be wrong, but I'm assuming that's the case. So clarify that for me. But we had Lucas Dwelly on from Donors Trust a couple episodes back and talked a lot about their unique approach to donor advised funds and philanthropy as free speech, which was the title of that episode for those who are interested in listening to it. How do you guys sit in the market? What does Fund Launch Partners do? And if you do it for family offices, who else do you do it for if there's an extended thing? But what do you guys uniquely do in the market? What problem are you solving for them?
Sure. Well, Fund Launch Partners, our mission is to democratize Wall Street. And what we mean by that is we want to make sure that good operators and good asset managers have the same kind of access to capital and growth and evolving their asset management business as these giant Wall Street firms that, they've got deca billions of dollars. And there's pretty big gap, a chasm between good operators that can actually drive alpha and big allocators that just manage tons and tons of money. And they drive alpha too, don't get me wrong, like Blackstone and KKR and some of these groups are fantastic. But where's the pot of money for the small guy who really does generate, high double-digit returns and has a lot of good value add? How do they get access to that? And we're trying to bring those skills and technology down to a scalable level in a box that gives the good operators the chance to show the world that they can actually be good asset managers and not just operators.
So I have some very specific questions for you then, because this is actually an interesting topic that I'm noodling on myself right now in general, right? So one of the interesting things about family offices is their time horizon. So I'm going to throw a bunch of things at you. I'm going to disclose some of my bias. You're gonna argue, debate, or agree. We're going to go back and forth a little bit here. Just prepping you for that. So this is my kind of framing up of the market from my perspective. I'd love for you to illuminate things I'm missing or validate certain things, and we'll just keep going back and forth. So family offices are unique because whether it's first generation, second, or third generation, right? They've accumulated a specific amount of capital. They have created a structure by which they have internalized the different mechanisms by which that capital gets invested, deployed, given away, passed down, right? So the family office is kind of bringing everything in-house because they have a better structure that way than just paying fees to other external advisors, right? And because of that, they typically have some kind of charter, right? Whatever the family mission or constitution is, here's kind of what we want to do with our blessing of wealth and our accumulated capital. And here's the causes, here's the types of things we're interested in. And they take a longer term horizon because they don't have LPs. They don't have institutions or limited partners that are on a 7 to 10 year fund life cycle that need to kind of check a box on X% of the allocation into alternatives or venture or whatever, and then we need to get that back in 10 years and with an IRR. They're looking for a return. They're looking to not lose their capital. They want to grow it, but they can take a 20, 30-year horizon of time versus a 7 to 10 or a 5-year one or a quarterly one. And so because of that, they're uniquely good capital sources for things that are not easy to solve. And when we look at the world today, we talk about what AI is doing to not just society, but the opportunities it will unlock, but also the disruption that it's going to cause and that it's causing as we speak, right? With jobs, with just everything that we've learned about the last 100 years. And those problems can't be solved quarterly earnings at a time, right? Like they cannot be solved by short-term cycles. But family offices need access to the alternative asset managers or to the things that aren't known, but Absolutely. Are competent. And so you kind of uniquely serve as a bridge, it sounds like, between those things. One of the other things I'll throw at you, and then I want to hear how you frame it up, is a lot of the RIAs that listen to this or that we feature are part of that splintering, right? So there's $130 trillion in assets under management managed by 16,000 registered investment advisors, independent fiduciaries, in this country, but 15,000 of them have less than $1 billion in AUM, which basically means that entire industry is made up, 93% of it is made up by businesses that do between $2 to $10 million a year in revenue.
The Goliaths.
It's super fragmented, right? It's super fragmented. And because it's super fragmented, they can't offer their 200 to 500 typical clients, which is what, those RIAs will typically have as end user clients that they're managing money for. They can't offer them alternative investments, which are real estate, precious metals, crypto, Bitcoin, infrastructure plays, because the check stroke is too small, right? And too spread out. And so family offices looking to do things within the scope of some of the problems that exist in society today need access to quality managers, which have access to quality deal flow. And is that where you guys are sitting in the market? And if so, what is your traction? What are your impact? Like, what does your growth look like over the next, couple years and months? Because that's a very big problem that you're attacking.
Yeah. Well, there's two parts of it that I think are really, really key. And you hit on it, and this is probably more for your audience, but we talk to registered investment advisors all the time. And a common theme we get from a lot of them is, the public markets and the stock world of today. I mean, it gets heated up. There's a lot of things that they can do in doing portfolio allocation, building ETFs, things like that. But at the end of the day, there's a lot of clients that come to them and just say, I can go out and buy these, on my own Scottrade account for free. Or heaven forbid, a client shows up to an RIA and says, hey, I ran my portfolio allocation through ChatGPT and it says you suck and I should move my money elsewhere, and Chat can manage it better than I can. So the RIAs kind of have a little chasm where they look at it and go, some of their clients are really happy with that because of the technology and tool, but man, they got to be really AI adaptive. And then the other half of it is, this is kind of like the Dave Swenson Yale Endowment Fund model, where he took a huge portion of the Yale Endowment Fund and swung it into alternatives and just grew that endowment so drastically that now there's a lot of market movement that's going from public equities and bonds over to alternative assets, which is great that there's a movement of like getting more money into the alternatives. And, obviously the pie just keeps getting bigger and bigger and bigger, but it leaves the RIAs at a disadvantage to say, if public equities is less attractive and alternatives are more sexy, and quite frankly, alternatives, a lot of time, they have a different risk profile, but they've got much better returns, arguably, but they're inaccessible to RIAs. And in my mind, that's actually a fundamental system problem with the gap in how RIAs run. They're not going to sell out a book of business where they're charging 50 basis points up to 2% on the assets under management. They're not going to transfer that over to an independent manager, and now they're not making anything. Like, why would they sell out their book? It doesn't make sense. But there's not a lot of mechanisms in the marketplace right now that allow them to get small alternative asset managers on platform with a Schwab, Fidelity, Goldman Sachs, some of these other creative platforms that are out there too, and allow some kind of a sharing relationship between the RIAs and the investment managers. So that environment is still under development right now.
Yeah, and and then when you think about the other side of that, you think about, so let's just say that family's got enough money to be rich, but not enough money to matter in the current structure of how money is managed. And what I say that is the sweet spot that we found in the audience that we seek to empower along with their advisors is that $2 to $50 million family. That's too small for a family office, right? Like a family office, you might, if you're at 150, 200 million, you might be part of a multifamily office. Certainly if you're $1 billion and up, you're going to probably have a family office, but that's a lot of money before you get to the point where you can even take advantage of being in a multifamily office type structure. And the majority, there's 14 million families somewhere in this country with 2 to 20 million in investable assets. And quite frankly, they don't register on the radar. And all of us, and I think this is the interesting time that we live, all of us are worried about the future for our kids or our grandkids. All of us that have any kind of resources that have been accumulated are not just proud of it, but want to know that we're making a difference with it, as well as preserving it and getting a return. And I think anyone who's half awake realizes the last 15 to 20 years of free money has accumulated all the dry powder into a handful of tier one firms. And you just have what was smart money, but now so much of it chasing so few deals that we're inflating assets to a point that is just an unsustainable bubble.
Mm-hmm.
And at the same time, we're not solving the problems that we need to solve.
And to that point, a lot of the family offices aren't happy with their investments. It's not sexy.
Yeah, and so when you talk about alternatives, it's like alternative investments are the things that, actually are attacking the real problems or solving problems, but you have to have access to them. And if your RIA doesn't have access to them, that's one problem. And if you are self-directed and you have your self-directed IRA, you have something like that, but you don't have the deal flow or you're not even seeing the things.
Yeah, you're not even in the game, let alone trying to get up to bat.
And so you're rich and frustrated.
Yeah, I can totally see that. Well, let me give you a little bit about what Fund Launch Partners does. And Fund Launch Partners actually evolved from an advisory group called Fund Launch. And Fund Launch's mission was to be able to take good asset managers and help them evolve into fund managers. And let me qualify that when we look at a fund, there's three key parts to the fund. There's always the asset management or the operation, which is where value is created. There's the fundraising, so capital formation, your capital markets group to get that dry powder. And then there's a back office function. That's the things like investor reporting, compliance, due diligence, GAAP, tax returns, everything else like that. And what Fund Launch found, thanks to Bridger Pennington, just genius guy, is he looked at it and said, there's no template for how to build a private equity fund. There just wasn't. So he took the time and energy to go out and build, for lack of better terms, a fund in a box. So he advised all these clients that were solid operators, and they were in real estate, they were in tech venture, they were commodities, maybe oil and gas or timber. And he looked at it and said, these are phenomenal operators that if you came to him and said, hey, what would you do with your business if you could buy the best assets that you see in your pipeline? Or if you could treasure hoard with a capital group, all the best assets that you've ever worked on. And we find these guys that come across and they're like, yeah, I've been in the business 20 years. I've seen so many deals that come through like my advisory or brokerage or whatever it is. And man, I just wish I would have kept a couple of them, because if I had just a sliver of some of these things I advised on, it would have been fantastic. But the kicker is they look at it and go, but I didn't have this war chest of capital to be able to invest. And so I did the transaction work and moved on. Well, Bridger developed this fund launch system to help them incubate and say, let's fix that problem. Let's go help you understand capital formation and capital raising. Let's help you be compliant. Let's put together a team. Let's get the third-party admins, the audit, the tax, to make sure you're doing it right so that you can focus on what you do best, which is that actual value-add operation. And in my world, I look at it and go, that's the core of entrepreneurism. And let's turbocharge it with this back office of financial support with investors so that you can do more of what you do best, and you can allow the capital groups on the back end and the back office to invest and support your cause. And as I see it, Fund Launch built the ecosphere of accelerating entrepreneurship and accelerating emerging managers that really could pick up assets, not just businesses, not concepts. This wasn't for like hypotheticals. It was, if your business is asset driven, we can accelerate the growth and development of that through using appropriate registered investment dollars. So that's what Fund Launch put together. Gotcha. And as he built that, it was kind of funny because he realized that a lot of these guys loved the system so much, they just wanted to stick with it and have additional partners and do more than just launch a fund. They wanted to have partners in the fund. So we developed Fund Launch Partners, as in the industry, you probably know it as a GP Stakes or GP Solutions Advisory Group. So once they get launched, we practice what we preach. And we use our same vendors and our same strategy to say, how about those guys that are really good in launch? How about we partner with you to help you grow to do 2, 3, 5, 10 funds to go from 5 million to 50 million to 500 million to $1 billion. And because we've seen so many of them and we've done hundreds of funds through Fund Launch, now we know how to partner with the best practices to get these guys really launched and become world-class asset management firms using those things that only the Blackstones and KKRs and Apollos and these behemoths, it's only been accessible to them so far. And we're bringing it down to the guys who are truly good emerging manager, entrepreneur operators and saying, let's take the best of both worlds and see if we can bridge that gap right there. And that's what Fund Launch Partners does.
Very interesting. So, we'll have a lot to talk about, I think, in general, just offline. But, while we're doing this in front of a camera, I'll use an example, but as an extrapolation for other people that might be interested in reaching out to you, I think, there's a numerous amount of, like you said, competent, talented, potential fund managers that are either managing less capital than they deserve, or not deserve, but that they could manage. They have more deal flow. They have more quality deal flow than they have capital to deploy. And the cost benefit of going out and trying to figure out how to crack the raising money nut takes them their eye off the ball of being a good operator, acquiring and cash flowing assets or businesses, right? It's like two different skill sets. And so I've long believed and have been, part of this show and part of building this community at Wealth Matters and Atomic Level has been about this concept that we now have the technology, forget what it is. We will be in a world where now a $2 to $20 million family can have the power of $1 billion family office, because quite frankly, like if you can replace a McKinsey consultant in 5 minutes, right? Yes. with a $20 a month chat app, then you're going to be able to do the same thing with the most weapons grade advisory and infrastructure for a family office. And that means that now we can bring the infrastructure and the operational foundation of a $1 billion family office to a $2 million family. But now we need the deal flow. Now we need the managers. Now we need the sponsored programs that are trustworthy, that are proven, that have been vetted. Because again, just because I have the infrastructure doesn't mean I have the right managers. And if I'm not a manager, I'm just an allocator. I want to be able to go find the guy who's been doing commercial real estate for 30 years with a 26% IRR, but that has less than 50 million in his fund because nobody knows who he is. I want to be able to find the person who's doing trade finance, uncorrelated 9 to 11% returns, owning hard assets, but that nobody knows who he is. I want to find the person who really understands Bitcoin treasury strategy and hybrid stuff, but isn't on YouTube or flashy on the public markets, with a bunch of leverage exposure to hedge funds. And so these are the things that we've been kind of, bringing into a cohort. But the unlock is having a mechanism like what you guys do, a dedicated resource to do the GP stakes or the partner thing. So how does the mechanics of it work? Like, let's say somebody had a fund, small or not, formed or not, but had the pieces. How do they get through your sales process, your partner process? Like, what does that look like?
The underwriting screening. So, I mean, a lot of our clients, probably 50% of our partners at Fund Launch Partners come through the Fund Launch ecosphere. So they realize they've got a value add that, they run out of friends and family money. They need to do it institutionalized, correct, correct regulatory. And so we see a lot of those come through Fund Launch as kind of an initial incubator. A lot of the other ones actually come to Fund Launch Partners because they launch their first fund, they get halfway through and they realize that's freaking hard. And they'd love some extra support. They'd love to brainstorm. They'd love some best practice strategy. They'd love some like strategic vendors and pricing. So that's how a lot of these emerging managers come to Fund Launch or Fund Launch Partners. But one of the benefits for Fund Launch Partners to probably your audience and community, I mean, we put it together as a fund package. So we invest into these funds with our own like private fund offering. So we raised a whole bunch of capital. We've got about 13 funds currently that we put together in the last 2 years. We'll probably do another 6 before the end of the year. And then we've got our second fund that we'll put together and we'll probably have later stage this year. And it gives the family offices 2 opportunities, not just one. The first opportunity is really easy. They can come and just be part of our fund and they can invest into our fund and we give them all the information. We kick over updates and reports of all our individual partner funds that we're working with. So that's kind of step one is, that's the ticket to ride is put some dollars in and we'll help you manage it. And it's a blind pool, but you can kind of think of it as it's kind of the mutual fund-ish pool of all these different managers in different sectors.
So option A, just to kind of clarify. So there's a LP in Fund Launch Partners.
Correct. And
you guys are essentially a fund of funds. You're either an Act 40 fund but you're a fund of funds and you're registered. And someone could write one ticket, $1 million, $2 million, $200,000 to you and get exposure to whatever you said you're going to have, 18 different funds. And so they may all not be pro rata. Maybe they're weighted a certain way to drive a specific.
We drive you a portfolio allocation. Yeah.
Right. A risk adjusted return in the alternative class. And so one choice someone who has enough capital to allocate might make is just, I want to take a look at being an LP in Fund Launch Partners because you have this fund of funds. But the other side of your business is how you get those 18 or those 12. And as you grow those, is you help take GP stakes and launch quality managers into the world where they don't have to worry about access to capital. They just have to worry about doing what they do, deals.
Close. So there's a couple of clarifications. For one, we're not actually a fund of funds, but we are, I mean, it fits in the regulatory compliance under a venture capital fund, but we actually buy a stake in their manager and invest into their general partnership. And then sometimes we'll do an LP commitment into their fund, but we're actually part of the management team with these partners. So we're in the trenches. If they win, we win. And if we win, the LPs win. So everybody's on the same incentive portion. It's not just a fund to fund.
So the family office that's writing a check into you is actually becoming part of the GP, meaning that's the blind part. They are actually in the GP of the funds that you
exactly
launch.
Tony Robbins wrote a book, The Holy Grail of Investing, where he talked about this GP stakes industry of, why not buy into the managers themselves and then help promote the entrepreneurs to be able to grow and develop. And that's the core of what Fund Launch Partner does.
I was starting to pick up that for people who aren't familiar with Tony's book, he's pushing it a lot right now too about the ownership economy. So we share, this notion that we have to create owners at scale because we've been consumers for the last 100 years. And so I'm familiar with the book, and as you were talking, I was like, this kind of plays into that movement, right? So you guys are either inspired by or ahead of that curve and helping enable. That's what you mean by democratize Wall Street. It's not really Wall Street, the public markets. It's access to private equity managers for the wealthy family that can't get access because they're not wealthy enough.
Exactly. So we're trying to bring it so that the standard entrepreneur, the standard operator, they don't know how to do, capital raising. They don't even want to look at the SEC or their state regulatory security, and much less do an audit or a tax return. And they don't know how to do investor reporting. They're contractors, they're brokers, they're deal advisors, they're investment bankers. That's a whole different world. So if we go to them and say, how about we put this all in a box and bolt it in, and you can do more of what you love doing? They love that. But man, there is a skill gap and a knowledge gap. And that's not something you could just chat GPT and say, can you set me up a private equity fund? We're working in the future that might be possible. And we might actually be spearheading a lot of that with our initiatives. But we give that access to institutional grade capital to the operators, but they do have to follow an institutional grade playbook. And that playbook is what we help mentor and train them to be able to understand and bring down. That's what we mean by institutionalize and democratize that. We bring it to the common man so they can access the capital through those mechanisms that they do have to jump through. But we give a chance for family offices, for high net worth individuals to be directly part of them. So, we're big fans of Tony Robbins' voice because he deals in the middle and large cap market. And we deal mostly in the small and what we consider a micro cap, like a first fund emerging manager, much below the industry standard of small is like 2 billion of assets under management. But what about the guy who's got 500 million of assets under management? Like, that's a great business, but it's still below the small radar for a lot of these emerging manager firms. So we're helping incubate micro to small so that the big players like Tony Robbins' different groups that he's got, and there's tons of them out there, they can pick them up and do increased value add where we kind of leave off. So we just play in our sandbox of small and micro and allow other people to access that. So that's the business.
So let's figure out, we're going to put all your contact information in the show notes. You guys can click the links and get in touch with Adam, but talk to us about kind of the different personas that you would like to hear from, and then the best way for them to connect with you. So if they're a high net worth, ultra net worth, so let's say they're $2 to $100 million family, somewhere in that range. If they're in there and they want to connect and understand how they could get in your world.
Yeah, it's a great question. So
if they're an advisor, that has 350 to $1 billion under management, but they're a RIA type, is there a way they could participate or help or be part of it with you and their clients?
Yeah, absolutely.
And then obviously family offices, you already have probably a path and they could reach out to you, but talk to us about how you want to be followed up with and where they can go.
Yeah, so there's a couple of different methods. If you want to find more about us online, go look at Fund Launch and what the thesis and the ecosphere is. Anybody can jump on to fundlaunchpartners.com and check us out. Some of the other initiatives we have in the alternative space is Alt Street. If you want to Google that, it's kind of masterclass format for emerging managers. My partner, Lincoln Archibald, has a podcast called Funds That Won, where we go to a lot of these institutional funds and we talk to them and we interview them and ask them how they got to the point where they went from small emerging manager up to, large and, mid and large cap. So those are a couple of ways you can find us online. You can check out LinkedIn. We got a lot of information there, and YouTube as well. Easiest way is just reach out to us on the website. There's a login and a place where you can request more information as an accredited investor. You have to at least be an accredited investor to work with our firm, but we're more than happy to talk with individuals. And something that's a benefit that in addition to just having the fund offering, we actually do have the ability to co-GP with different people or sidecar invest. So if somebody's part of our fund products within our emerging manager, and they look at it and say, hey, I love what's in the fund, but I'd rather load up on more venture or more real estate or more commodities. We actually structure opportunities for our fund investors to be able to have opportunities to co-invest when we have those open and available. And those are different structures altogether than just our traditional 5 to 7 year funds. So look us up on our website, check out Funds That Won with Lincoln Archibald, follow Bridger Pennington on fundlaunch.com. And that's probably the best ways to get in the ecosphere and not just connect with us as an investor, but learn what we're all about and hear more of what the Fund Launch story is.
Oh, it was amazing surprise and delight to kind of hear the void that you're filling and the fact that you've been filling it for a while and that you've got it to a systemized place, because, this is something I see as a big unlock in the market, something that we're focused on helping draw awareness to is, that mass affluent / low high net worth, but wealthy, family, where can they get exposure to uncorrelated returns, good asset managers, and do it in a way that's sustainable and actually manageable, like you said, without having to deal with all the muck and the infrastructure they can't afford to justify. So yeah, amazing. I'm definitely interested in doing follow-ups on how Atomic and some of the things we have can be part of your ecosystem, and we'll do those discoveries separately and offline. But thanks, Adam, for being here, and thanks for joining the Atomic Level.
Yeah, it's my pleasure. Love being on here and looking forward to connecting more with you and anybody who wants to reach out and connect with us.
Awesome. The links are in the show notes, guys. We'll see you next time.
Thanks.